Welcome everyone today to the webinar for Brookside Energy and in particular its most recent quarterly results presentation. We have with us today Gracian Lambert, Executive General Manager Commercial for Brookside, and David Prentice, Managing Director, both of which will run through the presentation shortly. As per the notice that went to the ASX, there was an opportunity for shareholders to ask questions prior to the webinar that would be put to both Gracian and David during the webinar. No questions were received, but that does not mean there is not an opportunity to ask questions. Using the Q&A button at the bottom of the screen, if anyone does have any questions, please use that button to submit your questions, and I'll put those questions, if not answered during the presentation, to David and Gracian at the completion of the presentation. Without further ado, I'd like to introduce David and Gracian, who will go through the Brookside Energy presentation for the most recent quarter. David, Gracian, over to you.
Thanks, David, and thanks to the Market Open team and for setting this webinar up. Obviously, thank you to our shareholders for their continuing support during the quarter, and a huge thank you to our team in the US. Our contractors and the people that work for our service companies for all their efforts. Obviously, we're going through a transformational drilling program at the moment, and everyone's extremely busy. So a huge thank you to the team over there in the US. So just scroll forward to the next couple of slides, probably through the summary slide. We can see here it was another very strong quarter for the business. Cash receipts at 10.2 million, positive operating cash flow of 5.2 million. We ended the quarter with 32.7 million in cash, up nearly 7 million quarter on quarter from sort of 26 million at the end of December. So a really strong performance across the business. Net production was just a little bit under 1,200 barrels of oil equivalent per day, 60% liquids. That number's obviously adjusted for wells that were shut in during the period for offset stimulation operations. The Swish AOI wells, essentially our reserve definition wells, delivered gross production during the quarter of nearly 170,000 barrels of oil equivalent, and they've produced cumulative production to date of about 1.8 million barrels of oil equivalent. So those are the wells that are really the engine room, if you like, for the business, and that's what's throwing off the cash that's enabling us to move forward with the FMDP project and then hopefully seamlessly next year into full field development. The FMDP operations commenced during the quarter on the Sanford pad, which is a 3-well pad with surface holes for the Aginla, Maroons and Fleury wells all drilled, and operations have continued very successfully during the quarter, as you can see with the regular drilling updates that we provide. We also appointed a independent non-exec director to the board during the quarter, so welcome Chris Robertson to the board. He's already been a fantastic contributor, and we're very pleased to have him on board. During the quarter, we also released our full year 2023 audited results. A fantastic year, revenue of 51.4 million, EBITDA of 27.6 million, up 26% year on year, and all of that leading to a net profit of 16.7 million. So a fantastic year for the business in 2023. We also completed our annual reserve redetermination during the quarter. That report came through with 11.6 million barrels of oil equivalent in total proved and probable reserves net to us, and a 10% increase year on year to the total proved reserves. So a good result from that annual redetermination. Go to the next slide. So just running through the 12-month performance. This is really just looking at a couple of key metrics that we monitor in the business. Obviously, net production. As I said in the introduction, the Swish wells are performing beautifully and on trend, and you can see there production's obviously coming off with natural well decline, and we're looking forward to that trend reversing when we bring the FMDP wells online. Obviously, that'll be a big jump when those wells come online. revenue tracking production on the right-hand side there, obviously impacted to some degree by lower commodity prices in the quarter, and particularly natural gas prices. Operating income tracking along nicely, smoothing out. We obviously some lumps and bumps there, as we pay, make distributions to working interest partners, but essentially trending along with net production and revenue. And then I guess net cash reconciliation. You can see the cash build there of almost 7 million quarter on quarter. You can see revenue. Obviously, some interest came in. We received some capital in from working interest partners participating in the FMDP, and then you can see payments out to working interest owners, OPEX and CAPEX, leaving us with that 32 odd million in cash at the end of the period. So all in all, a very good quarter. We'll go to the next slide. So it's touching on some of the high points of that annual reserve redetermination. I guess the things to touch on there, you can see total proved reserves went up by 10%, was a good result. Probable reserves dropped by 9%, but proved undeveloped increased by 8%. So you can see that's just a translation from probable to proved as we move through the process of drilling up this acreage. And total reserves down by 3%. That's a function, obviously, of production for the year. So a great result, and very, very strong reserve position with a very high liquids content, which obviously drives the success of the business. On to the next slide. So touching on the FMDP that's underway now, so you can see there that 4-well program that's currently underway. 3 wells being drilled from the Sanford pad and 1 from the existing Flames pad. The operations have run very smoothly to date. We're now in the process of getting ready to drill out the intermediate casing on the Fleury well, which is the last well to be drilled off the Sanford pad. You can see here, this is going to be a transformational drilling operation for the business in terms of boosting both production and revenue. You can see some of the numbers there in the slide, but obviously bringing these wells we're on track, on schedule to bring these wells online in the third quarter of this year, and then start to see the impact on the financials in the fourth quarter of this year and into 2025. So all progressing on time, on budget, and safely, and we're very pleased with the way it's going. The next slide. So this is really going back and looking at the performance of these Swish AOI reserve definition wells. So these are as I said earlier, the engine room of the business. You can see they're all performing very nicely. Both the Jewel and the Range is obviously paid out in very, very quick time, 6 or 7 months payout for both those wells. The Wolfpack looking like it's going to pay out sort of imminently, which is fantastic. Obviously, that had a higher drilled and completed cost and didn't enjoy the higher commodity prices that certainly the Jewel enjoyed, but still an absolutely marvellous well and performing beautifully. And the Flames well, another good performer, but it has been impacted obviously by shut-ins related to offset operator activity, and it's going to be impacted again as we move through the completion of the FMDP well. So that's what's pushing the payout time out on the Flames well. But all in all, these wells have performed better than we anticipated, and they have been the key to our success in terms of being able to throw off the cash that's enabled us to go forward with the FMDP and then moving into full field development next year. So great performance across all the wells. So on to the next slide. This is really just running through some of the volumes for the period. So you can see the gross operated volumes there, as I said in the introduction, just under 170,000 barrels of oil equivalent, giving us group net volumes of just over 100,000 barrels of oil equivalent for the quarter. Gross operated daily production just under 2,000 BOE a day, 1,200 BOE a day net adjusted for the shut-ins. The shut-ins are really about prudent management of the production, just to be safe when these offset stimulation operations are underway. And obviously, if we get extreme weather events, as we did have some during the quarter, extreme, we'll shut some of these, shut the wells in temporarily to account for that. But the really pleasing thing is that these wells are coming back to pre-shut-in production quickly and without any issues. So very robust production stream, and we're delighted with the way the wells are performing. I've already touched on the cash receipts and the realised pricing. Realised pricing was down a little bit quarter on quarter, but again, that's a function probably of the oil and gas mix changing somewhat during the quarter, and obviously sharply lower gas prices. On the expenses side, 4.2 million, so sort of half a million in production expenses and 3.8 million out to working interest participants and royalty holders. Staff and admin corporate costs are up a little bit Q on Q. We're staffing up our accounting and finance team and in-housing some of those functions in anticipation of us rolling into full field development next year. So some one-off costs in there. We'd expect that to normalise over the next quarter. CapEx was a positive 1.7 million. So we actually spent 2.7 million on the FMDP, but pulled in some money from our working interest holders, about 4.4 from our working interest holders. So a positive quarter on the CapEx front. So all in all, a good quarter and good solid numbers. Next slide. So just touching on the corporate side of the business. So I've kind of run you through in the introduction the full year results. So they were obviously out during the period. Again, very strong performance despite the lower oil price. So revenue 51 odd million, EBITDA 27.6, net profit. So that's the second year in a row that we've generated net profit in excess of 15 odd million. And really just a fantastic performance across the business, up 10% year on year. Net production volumes for the period were just a little bit over 500,000 barrels of oil equivalent. So again, sheeting that home to the success of those Swish AOI reserve definition wells. We also completed our first on-market buyback, and we bought approximately 250 million shares, about 5% of the issued capital. We are going to move forward with buybacks as part of our capital allocation strategy, but at the moment, obviously, we're managing cash flows to take account of future drilling. Obviously the FMDP, and then moving into full field development next year. And at the moment, it's prudent to manage that cash so that and sort of I guess pause the buyback until it's prudent to crank that back up again. And we'll see what that looks like once the FMDP wells come online, and looking at what commodity prices are doing and what the forward cash flows look like into 2025 and beyond. We also put out our notice of meeting and explanatory memorandum for the annual general meeting to be held on the 24th of this month. And a key piece of that notice of meeting was shareholder approval for a new securities incentive plan. This is an important part of the transformation of the business. If you think about moving into full field development in 2025, we are going to need to build out our team in the US to be able to cope with continuous operations, seamlessly moving from the FMDP into continuous operations in full field development. So at the moment, we've got a team of about 10 people in the US that are conducting all of this work on our behalf, and obviously, attracting and retaining key people and growing the business to be able to take on full field development is an important step in the growth of the business. So this plan framework was put in place following a review of our peers in the US and Australia, and in consultation with an independent remuneration consultant. And this is all about creating compensation plans for current and future employees, and all of these incentives will be linked to KPIs The short-term incentives will be cash-based and they'll be linked to essentially efficiency measures, so CapEx and lease operating expenses, and then long-term incentives, which will be in the form of incentive securities, will be linked to shareholder return metrics, so return on invested capital, total shareholder returns, and the like. So this is all about our employees in the US. This is about attracting and retaining talent in a competitive market. As we're growing the business and moving into full field development, we will need to build out the team, and we need to be able to attract and retain the very best people. It's important to note that that no securities can be issued to directors under this plan without further shareholder approval. So this is not about issuing incentive securities to the directors or the board, and the KPIs will be set by the board and in consultation with this remuneration consultant, and those KPIs will be will be communicated to shareholders in the annual report, along with our performance against those KPIs. So the process will basically be setting those KPIs and then reporting against them. And then finally, on the limited recourse loans, just important to make the point that those loans do not fall under the terms of this new securities incentive plan. So the terms of those loans, there's no changes being made to the terms of those loans. And I think, David, that's it in terms of the presentation. So it's been a fantastic quarter, and yeah, happy to take questions.
Thanks, David. As you say, a fantastic quarter. You've been in the game a long time, and look, I do urge, if any shareholders do have questions, please submit them. None were received prior to a comprehensive presentation, but there is an opportunity to ask a few questions. I'd like to ask one question, David, of you, and you and I have known each other a very, very long time. You've been in the game a long time. How pleased are you with this quarter? Like, you've got a big smile on your face. You're clearly very happy with what you're presenting today and the plans going forward, but a lot of hard work goes into getting these results, and a lot of perseverance and a lot of ups and downs. You know, you stand here now as the Managing Director of Brookside Energy that's just delivered arguably one of the best quarters in its history, and with a significant opportunity ahead of it. How proud are you of what the team has achieved?
Thanks, Dave. Look, we're enormously proud, and you know, it's important to make the point, and I do this when I'm talking to investors all the time, is that these kind of discoveries don't come along out of nowhere. You know, these are once in a lifetime type discoveries, and the kind of results that these wells are spitting out and enabling us to grow this business are very, very pleasing. And it's, you know, it's just, you know, it's a credit to the team in the US and to the board that we've been able to, you know, persevere through some pretty difficult times, and now we're coming out the other side now, you know, in a position where, you know, we're extremely well funded. We don't have any debt, and we've got this marvelous runway of very low risk development wells that we're now going to harvest the cash flow from. So yeah, it's very, very rewarding operationally, and you know, we're delighted with the performance.
Are you, and disappointed is probably the wrong word, but maybe surprised with the lack of engagement from the investor community in relation to share price and how the market is reacting to these results? Clearly, you know, a buyback generally is a message which says, you know, we think the shares are undervalued, and we're happy to use our own money to buy them back. You know, do you think there's a bit of a lag from the investors sort of capturing the good news and the opportunity that's sitting ahead of it?
No question. You know, like, you know, it's enormously frustrating for us that having made this discovery and then successfully made the transition from explorer to producer, which is obviously, you know, David, you know this from your experience watching hard rock guys as well, that, you know, often there's plenty of opportunity to stub your toe moving from explorer to producer. So having successfully made that transition and then to not see the reward in that, you know, in terms of the share price, is very frustrating and disappointing. I guess the only thing I would say is it's a sector-wide phenomenon. You know, the whole sector is suffering from a lack of interest and underinvestment. And you know, I've been saying this for a long time. You know, that will change at some point. You know, we know that the resources business generally is cyclical, and that investor sentiment moves around across the different sectors. And I've certainly noticed in the last probably 2 months that I'm starting to get a lot more inbound calls from institutional, you know, type investors and investment banks that I wasn't getting 12 or 18 months ago. So I suspect that we're starting to see that part of the market showing some interest in the sector and looking for value. And we are going to, you know, be an obvious deep value proposition to those people when they're looking through their metrics. So the important thing for us is to be presenting our numbers in a way that it's easy for them to understand, and that really sets us apart from our peers. So I think there's a fantastic opportunity here for shareholders, you know, over the next 6 to 12 months. But I acknowledge that the last 2 or 3 years have been enormously frustrating, particularly when you're delivering up such good results and the share price isn't responding.
This is genuinely a crystal ball gazing exercise. So I'm not asking you to make any predictions or prophecies about what you think the future holds. Looking forward and look, you know, 6, 12 months from now, what do you hope the business looks like?
So really, it's about you know, that continuing that operational excellence, and you know, let's look at first step, you know, double our production off the back of the FMDP, then move straight into you know, into full field development, and you know, double the production again. So you know, if I roll forward 12 months, I want to be you know, successfully moving through that full field development program with very, very strong cash flows, you know, hopefully into a strong commodity price environment. And then we'd be looking at, you know, ways, okay, so how do we return some of that capital to shareholders? How do we use some of the capital for growth? And you know, what's next after Swish? You know, that's the kind of I guess the crystal ball for the next 12 months.
Well, there is a question here which talks more to the share structure. Is there a view or an interest in consolidating the shares in any way and sort of tightening that structure up, or is the focus really on really operational and keeping an eye to the shares and the share price, but really on the operational side of the business?
Look, a consolidation is something that the board does, you know, consider from time to time. We've got no active plan to do one at the moment. But yeah, look, it's something that we consider from time to time in the context of the kind of investors that we're trying to attract to the register. You know, does the number of shares on issue, is that an impediment to certain pools of capital? You know, all of those questions are something that the board considers from time to time. But you know, at the moment, we've got no plans to do one, and we are absolutely laser-like focused on making sure that we successfully execute this FMDP, because you know, we do that, we get that done, and you know, double our production, you know, double our cash flow, then you know, that's the most important critical thing that we can be working on at the moment.
A question here you may not want to answer, but I will put it to you anyway. Do you keep an eye on the register? There's a question here around some of the nominees starting to creep up their holding. Do you keep a bit of a look on, well, who are some of these nominees, and you know, what is the role they can play in the company going forward?
Yeah, look, so certainly we've seen you know, one of the nominees you know, has been quietly accumulating shares, you know, over the last probably at least for the entirety of the last quarter, and probably earlier than that. So there's been a pretty significant increase in their holding, and you know, that's probably about as much as I can say about that without breaching privacy issues there. But yeah, they're quietly accumulating shares, and you know, and I guess on the other side of that coin, we've seen you know, some retail shareholders unwinding their positions. So So yeah, that's a logical and not uncommon thing to happen, you know, in where we are in terms of the maturity of the business. You know, it's sort of, you know, transitioning from one group of shareholders to another.
Lastly, there are no, this is sort of the last question that's come through. ASX companies are well known for being entrepreneurial in how they tackle projects and regions, and clearly have shown a great entrepreneurial flair to get into this part of the world and develop the projects at the speed you've been able to develop them and the way you've been able to undertake that development. What generally would happen, you know, as the question says, is it starts other groups coming out of the woodwork going, well, you guys seem to be pretty good at what you're doing. Maybe we should be working with or partnering with or looking at opportunities to work with you, and a good cash balance, a good balance sheet and access to capital. When and if does M&A start becoming something that you focus on in the future, or have you got your hands full with the current projects and the current plans?
No, look, we're certainly active in that in reviewing potential opportunities. You know, we're always looking at stuff in the US that might be complementary, you know, to our assets there in the Anadarko Basin. So we're, you know, there's probably not a week or a month that goes by that we're not actively swabbing down some kind of an opportunity. And you know, we also follow closely what our ASX peers in Australia are doing, particularly those that have assets in the US. And again, you know, if we see something that makes sense, that you know, where we feel like, you know, we can add some PDP and cash flow and production, and it's accretive to shareholders, and you know, that's you know, we're alive to it. We're you know, monitoring these opportunities, and you know, obviously nothing live at the moment, but we're always got an eye on these things.
Well, thanks, David. A great presentation, a stellar quarter for Brookside. Clearly smiles all round, as you should have, having ridden the ups and downs of the oil and gas game over a long period of time, but clearly delivering strong results for Brookside and its shareholders, a team effort and a clear focus on the growth of the company going forward. David, grazie, and both thanks for your time, and we look forward to following the company and also its results over the coming months and years. So David, thanks for your time.
Thanks very much, David. Appreciate it.
Thank you.